Good morning. I'm Josh Rowland. I'm the CEO of Lead Bank, a community bank based in Kansas City, Missouri. I am so pleased to get an opportunity to speak to you today because we have so much in common. All of us are here together because we are concerned, we are passionate about the future of our organizations, whether that's a bank, a building society, a credit union. We understand that we must be thinking about the future, that we have to look ahead and learn and confront some very, very real challenges because our industries are challenged as never before. We face just unprecedented competition from the big banks and from startup financial technology firms and from global retailers who all think that they can do our business better than we can. And they promote that story and they brag about it. And yet what we know is that the work that we have done for hundreds of years in our communities, on our high streets, or as we say in the United States, on our main streets, is the proof that we understand how to communicate with and how to represent, advocate for, and enable the success of our members or our clients or our customers. So we face incredible challenges, but we're here together to learn and to, I would say, form a new path that confronts those challenges, some of them being external threats, some of them being internal threats, like mindset or the way we've always done things. So what I'd like to talk to you about today is how we can see a way forward. See a way forward that goes back to the very essential, fundamental first principles of what brings us into banking in the first place. And that's where what unites our organizations is so important to focus on. So I want to give you a little bit of background for those of you who don't know much about community banking in the United States. It's a very interesting phenomenon, actually, because what it was premised on was the idea that communities in small geographies could come together, pool their capital, and make loans that would advance members of the community. And this has existed in many ways and in many kinds of communities in many countries, the same principle. The test of the community banking model really came at the Great Depression. And at that time in the United States, as a massive banking crisis unfolded, the question was for policymakers, do we create a federal insurance scheme that then enables banks who comply with it to receive federal insurance on their deposits? You know, the backbone of a banking system. And the decision was made that it wasn't just the money center banks or the biggest banks in the country. It wasn't just the JP Morgans who would receive the benefit of federal deposit insurance. It was all the banks. It was a community bank based in Garden City, Missouri, a town of about 1,000 people. And that bank, chartered in 1928, was entitled to the same insurance privileges as the biggest banks in the country. And that's a remarkable decision. What does it reflect? It reflects a recognition that the biggest banks in the world are not going to serve the interests of those people in that community. They're not aligned. A small loan to a farmer in Garden City, Missouri is not going to make any difference to a big New York bank. And there was a recognition that that action, lending to people in the real economy, in real communities, all across the United States, was essential to our well-being. And it's endured. Garden City Bank is a predecessor of what we now call Lead Bank. It was started in 1928, as I said, by a community there of merchants and citizens and farmers to provide the financing that they needed. And it was built on that principle. And so when I think about what we are facing today in terms of competition, I go back to that principle. And I believe it's a principle that as building societies or as credit unions, you share. Because the very purpose of organizing around mutual benefit is that we understand and can serve our own interests and the interests of our members, the people that are part of us, better than a bigger, fragmented, hierarchical or bureaucratic, disconnected banking institution. Pooling assets, managing risk, and reinvesting in our communities, street by street, is a principle that community banks, mutuals, and credit unions all share. We at Lead Bank began a transformation, though, because when the Great Recession of 2008 and 9 happened, we were in bad shape. We had a very serious management problem. And when my family had bought the bank in 2005, we really had no idea how bad it was going to get. But it got very bad. And so around 2009, we had to make a decision. Are we going to save this bank? It was that bad. Are we going to save it? Do we have any idea how much capital we're going to need to put back into the bank to save it? And if we do, then what for? In the United States, there are tons of community banks. And I'll be totally frank, nobody needs another one. So if that's true, if there are so many community banks in the United States, and even in Kansas City, Missouri, why save another one? What's it for? And that was where I started to think about first principles. I started to think about what we could be that would be differentiated, but still meaningful for the neighborhoods that we needed to serve based on our charter and our mission. So in 2010, we renamed our bank Lead Bank to articulate for our staff to say out loud that our job was to be leaders for the benefit of our communities. We had to advance because there was no one serving our community the way we could. No one cared about Garden City the way we could. So what did we have to do? We had to think about investing in all of the services and all of the products that a really advancing community deserves. So that was a little bit challenging. And this is where mindset comes in. Because essentially, I had to talk to our staff about what is desired, what is desirable for our clients. What do they want? Well, there were some people in our staff who said they don't want mobile banking. There were some people on our staff who said remote deposit. They don't want that. And there was always an idea, it was the they, another, the anonymous customer didn't want the technology, didn't want us to innovate. And I kept asking myself, well, all of these people have mobile phones, and all of these people watch Netflix. All of these people have satellite TV. So what makes me think that I know better about what their digital appetite and needs are? So the question was, were we right? Were we right in assuming that our expectations and our understanding of what the banking industry could provide our clients just didn't care about. Well, it just didn't make any sense to me. But it did definitely bring this central question right to the fore, which is, what do we exist to do? And if we think about the difference between first principles and traditions, or the legacy of the way that we've done business before versus what we exist to do, then we started to have a different conversation. We started to have a conversation about the fact that we've never done something is actually not mission. That is not a mission. That's not an aspect of our mission. That's a function of our past. So we began to shift, and we began to talk to our customers, and we began to reach outside of our kind of traditional ways of thinking and say, where do our customers expect innovation? They all expect to be able to access their accounts on their mobile phone. And there's very little doubt about that. We see it because we see very little branch traffic. We see declining branch traffic. That doesn't mean they're banking less. That means they're using other tools, other doorways into the banking system, such as an ATM or mobile banking or desktop banking. So let's reconceive of what's happening and reprioritize the way that they actually use our bank. So we began looking outward and trying to find partners who could deliver solutions to us, to our members, that would be really useful to them. And this is where we began meeting fintech companies and developing channel partnerships with them, whereby they would use our platform and we would offer services through their marketing to customers all across the country. And that process then required us to introduce new systems of compliance, to build compliance teams that were kind of not in anybody's mind 10 years ago. The Compliance and Bank Secrecy Act here in the United States, the anti-money laundering team that we need to assemble, and the rigor with which we need to audit our outside vendors is very high. There's no doubt. But when we talk to our customers and we see their behavior, we know that it makes a difference. Our growth has been extraordinary. And it's not because of a particular choice that I would say we made, but it is about saying, what do we exist to do? We exist to provide financial services that are needed to people who don't have good access to them. And when we look at the behavior of our customers, whether it's through using tools like Venmo or other person-to-person payment tools, we know that those things are eroding our business. Because the less utility that we have, the less mind share we have, or the further we are away from the top of their wallet, being the first card that they would use, then our relevance is eroding. And we know it's happening because we know people are using tools like Apple Pay. We know people are using Venmo. Indeed, Venmo is the term for how you transfer cash to someone else via your mobile phone. And to us, that attacks us at our heart, which is the utility that we can deliver to ordinary people making small transactions. And if you don't agree, or if you don't think that the importance of a $5 transaction on Venmo is worth thinking about, I challenge you. Because those transactions are only getting bigger. The dollar volume, the amount of transactions that people are willing to trust to a non-bank financial company is staggering. My daughter, for example, had to put down a deposit on an apartment. The landlord told her to Venmo that deposit. Thousands of dollars. As a banker who offers a product called Zelle here in the United States, I was practically, but I was beside myself. But I had no choice because that was what the landlord demanded. But think about that. If people begin to think that Venmo is the solution for transferring money, not the bank, that they can store money in Venmo, then where does a credit union fit in? Where does a community bank fit in? Where does a building society fit in? Because the other central lesson of all of this is that people understand convenience. They don't really buy our argument that our branch network is very important. They only want to know that it's on their phone. And it's about 2 clicks away from the transaction they want to do. So to me, my quest, my hunt, my drive is for relevance. And the future of our industry is in innovation that meets our real customers right where they are and can deliver those transactions, those benefits that real people want. So I hope that our experience at Lead Bank, as we've thought through the first principles of what we exist to do, lined them up with the appetite, the demand, even if we don't think it's there, the demand of our members and clients and customers for innovation is a search and is a drive for our continued relevance, because we know that we have something that nobody else has. We know that we have a track record. All of us here have a track record of meaningful transformation and empowerment of the people that we serve. We know it. And we cannot let some fintech company that's never done it before take our customers away from us by telling us and them that they do it better, because we know that we do it the best way possible. The only question is getting out of our own way and innovating to make that happen. Thanks very much.